Mark S.A. Smith, welcome to the Capital Raisers show, man. How are you doing today, bro?
So awesome. It is so much fun making money. Let's work on raising some capital.
Yeah, man, no doubt. I'm pretty pumped up to talk to you. You are particularly interesting to me to speak to because of your relationship with my CEO, the CEO of Bakerson. Props to Bakerson for providing me with this studio, by the way. Check us out at bakerson.com. So, Mark, you actually work with my CEO
I
as an
do.
executive strategy coach. So,
It's true.
tell me a little bit. Why don't we actually, before we go into that, tell us a little bit about your background?
Great. Well, Ruben, I am a learner of everything I possibly can. So I've got a degree in mass media, radio voice. I spent years in radio, got an electrical engineering degree, and then ended up in sales and marketing and high tech. And then ended up for the past 30 years running my own consulting company, specifically around the world of how do you sell expensive, complex things as fast as humanly possible. And I've done that for large multinational companies like HP and IBM and Microsoft and Oracle and NetApp and a bunch of other folks like that. And so, what I have learned is how people think about spending large sums of money.
Yeah, and now you're doing it specifically with the concept of how to apply those principles to raising capital for multifamily or real estate syndication in
Well,
general.
just raising capital in general. What does it look like to raise capital? What is the thought process that people go through when they look to place money in an investment? And so I've taken all that stuff I've learned about how people think about buying expensive things and applied it to the world of investments. And it shouldn't surprise you. There's no difference. They use the same exact principles. There's some new twists. The principles remain the same, but there are some twists in how people think about this.
Yeah, cool, man. I'm really interested to dive into that specifically about the capital raising machine that we're going to be creating with Bakerson.
Mm.
But before we go into that, tell me a little bit about your travels, your international travels. You used to live in Amsterdam, is that correct, or somewhere in Holland?
I I did. I lived in Amsterdam for 3 years when I was a young man. When I was working for Hewlett Packard at the time, responsible for the sales of one of their technologies in Middle East and Africa and Europe. And so I spent a lot of time traveling, meeting people, talking about the technology. And I really learned about how people think when it comes to business is 90% the same no matter where you are on the planet. I've also done a lot of travel for Hewlett Packard in the late 2000s. My company did 500 events for them worldwide as we did product introductions. And I still do product introductions for high tech companies as part of the fun and games that I get to play. The reality is that when it comes to money, we all think about it pretty much the same. Minor variations, but there still are the essences don't change. Leadership is still leadership. Business is still business. Accounting is still accounting. There might be some difference in how we shake, bow, kiss, or ultimately make a presentation, but in general, as humans, we are still pretty much the same worldwide.
In my dealings with you, I heard you say something that really captured my attention, which was giving yourself the authority to do something. Now, you're an author of 14 books. Some of the topics that you wrote about, you had no experience actually about before you wrote those books. Guerrilla marketing, for example. So tell us a little bit about your your background as an author, some of the books that you've written, and how you gave yourself the authority, or why that concept comes into play with you about writing all these books.
Sure. Let's just start off by saying no expert starts off as an expert. Every expert starts off as a newbie, as a neophyte. And expertise is gained because you have an interest and a desire to take on a level of expertise in that particular topic. So the first book that I wrote and had published is this one, Guerrilla Trade Show Selling, with J. Conrad Levinson, Mr. Guerrilla Marketing, and Orville Ray Wilson, who also wrote Guerrilla Selling. And this was based on initially a little 5,000 word article that I wrote called 49 Ways to Be Your Best at Trade Show Selling. And it was really based on my experience selling technology through trade shows. So that was the beginning. So what made me a trade show expert? Well, first of all, I had scars and bruises. And then writing the book took me the rest of the way home. All right. So then the second book in the series was this one, Guerrilla Teleselling. So how do you get the business when you can't be there in person? Yeah, was I an expert in teleselling? Well, I did have a telemarketing group when I was working as a sales director for a software company. But a lot of this stuff came through research. Final book in the Guerrilla series was Guerrilla Negotiating. Now, what made me an expert in negotiating? I was willing to research it. We also took a different twist. This book talks about the antidote to dirty tricks that people play on buyers to help them keep more margin. Most negotiating books are how do you get a better deal? This one is how do you keep more margin? How do you reverse that particular trend? In each of these areas, yeah, I really wasn't that much of an expert. But there's four fundamental ways, Ruben, for you to create expertise. Number one, and the most common one, is go to school. And there's really not a lot of advantage in going and getting a degree because your degree is exactly identical to every one of those other degrees, with the exception of the marketing that Harvard puts out, which makes it a superior degree over others, blah, 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 but a degree, right? You follow their course, they give you a sheet of paper which says you have therefore been blessed and you are now an expert according to us. Second way of creating expertise is school of hard knocks. Let's just go out there and do it. Experience. Third way is to do the research. Read the books. As you do, interview the experts. And you've gained a lot of experience by talking to hundreds and hundreds and hundreds of people that have been doing this, and you just sort of tease out the thing that they say in common and the stuff that just doesn't make sense because of their psychology. And then the fourth way that we create expertise is you just make the stuff up. It's called a hypothesis. You make stuff up. You create a hypothesis, and then you go out there and you test the hypothesis to see if it works or not. And I use all four of these methods. I've got a couple degrees. I got the scars, bruises, and liver damage. I do the research, and I make stuff up all the time.
Very cool, man. Yeah, we used to do that back in chemistry class at Arizona State. So shout out to ASU, man. I got a degree in chemistry there. So let's go into, I think everybody's interested in the nitty gritty, which is the capital raising part. Now you have written a program on raising capital and attracting investors, and you market it through ondemandyou.com. And you are actually a coach, or you do an executive strategy coaching program that you do. But tell us about some of the content that you provide. I've got a list here. I typically don't have a preset questions, but let me go over some of the things that you talk about. Finding and attracting investors, autopilot marketing, educating investors, nurturing investors, raising capital as a complex sell. I kind of want to stop there because you teach this concept of tactical versus strategic type of marketing. Tell us a little bit about that.
Sure thing. We can take any product or service and put it on a continuum ranging from strategic to tactical. Now, tactical things are used to perform a task. They tend to be seen as a cost or an expense, versus strategic things seem to be seen as what we use to fulfill a mission. And we see this as an investment. And I can put everything on this continuum between these two ends. And so tactical types of products and services are low consideration because if you screw up, you can find another replacement today. A strategic type of purchase is one that has a longer consideration cycle because if you screw up, you may never recover. And so for that reason, we have to use different approaches to marketing and sales for tactical products and services versus strategic products and services. Most of the sales methodologies and marketing methodologies that are still commonly used today were invented in the late 1800s. And it's time to bring them up to modern standards about how people think. And so it requires a different approach. When we talk about strategic type of purchases, this is where you'll have multiple people involved. For example, if we're talking to an investor and they're looking at placing some funds with us, there's going to be multiple people involved before they can say yes. They're going to have their attorney involved looking at the agreement. They're going to have their accountant involved to make sure that the monetary aspect is correct and that it doesn't wreak havoc with taxes or other aspects, perhaps in a trust or something of that nature. And then they're going to also check in with their spouse. And the reality is that 90% plus of investors today are old guys. They're guys between 45 and 65. Ladies, I'm not meaning to leave you out. This just is the way it works right now. They have a specific approach that they're going to take, and they have to check in with their spouse. And the spouse is the ultimate decision maker in a lot of these investment deals, because what the spouse is looking at is very different than the investor, what they're looking at. Each of these four players has a different vision of value, a different decision of what makes it a valuable or useful investment. And so we have to be able to message to each of these four decision makers before they stroke the check. And that's where we have to really put into play this concept of this is a strategic marketing and sales methodology where we have to message to multiple people. Now, this comes directly out of my experience in selling computer systems, software. You have multiple people involved in every one of these deals, and every one of them has a different vision of value. And so that's why I'm applying this concept that I created for technology sales to the world of fundraising. It's the same fundamental principles. Now, what changes is the vision of value for each of the players, but that's true for anything that we're going to put together, anything that we're going to sell for others.
Very cool. Now, when I met you in person, it was at Joel Block's event, which was a symposium about hedge funds and syndication. And one of the things that I got to do was to get up on stage, or at least in front of everybody, and talk about a deal. Now, as I think a lot of people know, I'm learning this business, and I'm very fascinated by the raising capital side of things. And I do realize that raising capital and acquiring capital is very different if you compare it to the finding and acquiring of real estate or analyzing, underwriting, and acquiring deals. But on the capital raising side of the business, as I'm learning, I got the chance to get up and talk about real estate. And where I want to transition to this, I talked about this deal that we had, a 90 unit that we ended up acquiring down in Tucson. And I was basically presenting the deal, but there's another way to capture the audience's attention when you're up front, and that is by telling your story, or telling the story of the deal rather than telling people about the deal itself. Walk us through this process of telling your story, or telling the story about the deal in place of telling people about the deal.
Indeed. Well, the magic of storytelling is that when we tell a story, it shuts off people's defense circuitry. If we're pitching a deal, shields are up. I'm being pitched. And so what happens is that people listen to the pitch in a mismatch mode. In other words, they're looking for what's wrong with the deal, not what's right with the deal. And so pitches create friction to the deal just because of the nature of people have an innate resistance to selling or to being pitched. So the idea behind telling a story is that when you're telling a simple story, the resistance isn't there. They're just listening, and they're actually looking for parallels to that story, to their life, versus looking for, oh, that's not possible. Because if we as humans went into story listening mode, we would never believe any movie that Hollywood creates. We know it's all fake, every bit of it. The actors are fake. The story is fake. The pictures are fake. The music's fake. The whole thing is invented. Yet we still sit in the theater, suspending our disbelief and enjoying the story. We are wired to listen to stories and believe what we're hearing. Later, we might judge whether or not it was a good movie. We want to use that same psychology when we are presenting our opportunities. And the idea is to tell the story about fundamentally the opportunity that we're looking at, the challenge that we're trying to solve. This could be that the opportunity that we're trying to solve is we have a distressed property. And boy, we've spent years finding properties like this that we can go in and we can apply our construction knowledge and our design knowledge, and we can repair it and we can fix it, and we can make it gorgeous, and we can make it desirable, and we can take this ugly piece of property and turn it into something that people want to be a part of. And so we go through, very simply, we don't want to take a lot of time, but go simply through this arc where we take something that is undesirable and we've made it desirable. And then we talk about the impact that this shift has made to others that have been involved. And then we just end up with, after we've told the story, say, is this something you'd like to be a part of?
Yeah, I don't want to catch you off guard, but there was one module that I listened to about a individual and their problems. And you were telling a
Yeah.
story about this individual. Maybe you could repeat or do something similar where you talk about the explanation, or not the explanation, but this particular individual and how they may be interested in investing because of the problems that they have. Tell us that story if you
Indeed.
would.
So the way that this story is designed is to share a story about other investors who've been a part of your deals. And so it's really more of a line of, let me tell you about an investor that partnered with us on a recent deal. This guy, let's just call him Ivan. I really don't want to reveal his name, but let's just call him Ivan. And Ivan is 59 years old and just recently started to think about retiring from his accounting business. He's been running a CPA practice for his entire life. And it's getting to the place where he wants to slow down and start to enjoy his grandkids. And so, what Ivan realized is that with the insanity going on in Wall Street, where it's way up and way down, and he has really zero control over that, that he needs to make sure his money is working just as hard as he is, so that that money is there and available when he and his darling wife and his great children and grandchildren want to enjoy the life that he has created through his hard work as a CPA. But the problem is, he really didn't have any other investment strategies in mind beyond traditional brokerage firm offerings. But he was talking to a couple of his clients that had made lots of money via investing in real estate and decided that he needed to investigate how this worked. Now, he needed to figure out a new way to make this investment, but he also was a little unsure because if he got it wrong and he lost his capital, it means that he would be living down by the river in a van. And so there was quite a bit of penalty if he didn't get this right, although he was not sleeping well given the fact Wall Street was a roller coaster. So he started to investigate what it looked like to do private equity investing in real estate deals. He really didn't want to own the properties himself because he just did not like the idea of getting a call from tenants about toilets in the middle of the night. His wife really didn't want that to be part of their lifestyle. So he started to talk to people that had a variety of syndicates that they had done in the past, and he came up to speed on what asset classes there were. And he came up to speed on the variety of syndicate offerings and how limited partnerships worked and how shares worked in the private equity marketplace. And as he went through, he decided that he needed to find somebody who was an experienced operator. And this was not their first rodeo. And they had been through a business cycle or two so that they understood how to make money in up cycles and how to protect the money in the down cycles. And he eventually settled on working with one particular investor that he really liked. And he decided that liking somebody was an important component of this. He really liked the asset class. He felt safe with that asset class. And he liked the deal. He felt that the deal was fair and gave him the opportunity to sleep tight and not worry about his money. So the end result is that Ivan placed his first investment with a syndicate, feeling comfortable and confident that this was the beginning of his successful retirement years and that he could have his money working just as hard as he had so he can enjoy his wife and grandkids.
Man, that is beautiful. I love that story. So as I'm listening to you live here on the show, all of my guards are down. I'm just listening to the story about this person. And like you said, I'm starting to relate myself to this individual. Now, let's actually go into what we plan on doing with Bakerson, because as you know, so we've been raising capital in a very antiquated way. We find the deal and then we raise the capital. And we're starting to rip down that structure and do it based off of the learnings that I've had on this show, which typically involves first explaining to people who you are, getting them to know, like, and trust you, and then going into multifamily and why it's an awesome asset class and the inherent values, tax benefits, cash flow, diversity, et cetera, et cetera. From there, we move into what investing with a company looks like with Bakerson, for example, what the return structures. And then when you do those steps prior to having the deal instead of after, then you've already had these conversations with investors way before. So we're taking some of these concepts, but even before I knew about these concepts, we had started planting a seed about a business called the Capital Raiser Machine. Why don't you share a little bit about that and what we plan to do with it within Bakerson and why you're excited about it?
Well, you really want us to reveal these secrets? This is pretty powerful stuff, Ruben. I don't
Hey,
know,
hey,
man.
I was told to share as much as I could and give it all away. Give your life
All
away
right.
in service, as Wayne Dyer says.
Wayne managed to collect a lot of money being of service to other people
Yeah,
along the way. Therefore, he lived in Hawaii and lived a great life. Anyway, the answer is that for people to feel comfortable placing their funds, they indeed have to go through a process where they get to know you, figure out if they like you, figure out if they trust you. Now, all of those things are earned, they're not granted. And so you have to go through a process where you create a relationship by giving them what they want, when they want it, the way they need it, as they need it. And if you think about it, that's really what creates trust in people is this consistent behavior of delivering value over and over and over again. So that's the personal experience of how do we create trust. And for the same way that your listeners and viewers trust you because they've heard your voice, seen your face, and had a consistently positive experience when it comes to learning about capital raising, that they have granted you with trust. Now, unfortunately, trust is a very fragile thing. You can undo trust very quickly. Psychologists tell me that it takes 11 positive events to overcome a single negative event. And that's the reason why we're very careful with our behaviors and very careful to make sure that we are indeed trustworthy. So trust is something that's earned versus I'm going to, yep, you can't say to people, I'm going to earn your trust. You can't say that. Instead, you have to just go about doing it. And then when the trust level gets to a certain point, then they're saying, yeah, I trust this guy. But it's going to happen with repetition. Now, out of the old work that Jay Levinson did in his advertising days is it takes an average of 7 positive impressions to get a person from apathy to where they're beginning to trust you. Unfortunately, people ignore most of those impressions, so it actually takes 3 to 4 times that these days. So it takes a lot of work. It's a long haul. You know, if somebody is at the beginning of the story like Ivan was, it may take 90 days for them to get to the point where they'd like us and trust us. But we had better be solidly delivering consistent content all the entire way. So that's the know, like, and trust piece. And by the way, that a lot of that has to do with vulnerability. The fact that we aren't flawless, but we are excellent. It isn't that we've not made mistakes. It's that we have fixed the mistakes we have made. And it's not so much that we are perfect, but we are heading in the direction together, learning this together, willing to solve the problems together. That's where we generate those feelings of trust. It's an interesting thing. Being human is definitely a weird situation. So then the next thing is once people know, like, and trust you along the way, this is a parallel type of approach. While they're doing that, getting to know us and knowing we're not just a faceless entity, but we're actually human beings that are out there doing cool stuff, is to then work against the asset class. So here are the asset classes we represent. Here's the reason why we choose them. Here's the reason why you can make money in an up market. Here's how you can make money in a down market. Here's how you make money whether the market's moving up or moving down. And so educating people on the various options they have available when it comes to placing their money as an investment. And you're going to want to take a look at all those aspects and all those elements. Why is it attractive? What are the flaws? And why are we choosing this particular asset class over others? So, and part of it at Bakerson is we look at a specific asset class because it matches our vision of bringing service to our communities versus a corporate asset class selection. So if you've got a giant REIT that's being sold on Wall Street, you're going to have a different asset class vision than private operators like us who are looking at serving communities versus serving specific pools of shareholders. And if you want to come along and serve the community along with us, we invite you to do so. Doesn't mean we don't serve our shareholders. It just means that we choose our projects first and then our shareholders choose us. And that allows us to be a whole lot more intentional about how we approach this. So after people understand the asset class and why we choose what we do, then the next phase is so that people understand how they make money. What does the cash flow look like? Where do the dollars flow in? How do the dollars flow out? How does this thing end? Every investment at some time comes to an end. And so you've got to talk about the end of the investment as part of the overall process. And so here's how we work together. Here's how we communicate. Here's when you get the reports that your CPA is going to require. And when you choose to place money with us, here's the steps that you go through. And if you have your attorney and your accountants review the deal documents, then here's the process you go through. Oh, by the way, here's how you talk to your spouse about this particular deal so that they feel comfortable and confident and they can tell their friends about it without being embarrassed. And all of those elements have to be in place before we come to the next step, which is let me tell you about the specific deal we have available today. We are raising money for this particular project. And now, when we talk about the numbers, they make sense. Now, when we discuss the flow and we discuss about the opportunities and we discuss the obstacles and we discuss the value generation, it's not that we have to talk them into anything because they have the framework to understand it all. And so the investor machine is really designed to do those first three things so that people who want to figure out how to place their money, where Ivan wants to place this, can do so in a way that feels comfortable at the right speed and the right timing. Because as you know, my friend, people don't have of $250,000 in cash just laying around looking for some place to place it. It's timing. They have money in other deals. They have money in Wall Street. They have money in other real estate, and it takes a little while to free up that cash. And so we have to figure out the timing and let people prepare so that they can move funds from one asset class to another asset class if that's what they want to do. And so this machine is designed to help people on that journey with certainty wherever possible, safety wherever possible, and confidence wherever possible.
Your skill set is going to bring a ton of value and help a lot of people in terms of how Bakerson can affect communities and investors and create generational wealth for a lot of people. Let's go into some of the other aspects of raising capital. Specifically, I'm curious about finding and attracting new investors. I think everybody wants to know, where do I get these high net worth people? What are some of the tricks and tips, strategies that you have for finding and attracting investors, or some of the tools that you plan on using and implementing to find and attract investors?
All right, good question. Well, investors are really good at keeping themselves pretty well hidden. They have their cloaking devices on because otherwise people are hitting on them the entire time for money. So investors really are not out there like saying, "Oh, hey, I'm an investor. Come and talk to me." No, when you hear that, run. So instead, we have to use a stealth mode, which is more along the lines of introducing ourselves as those that work with investors when they have money to place so that people go, "Oh, really? Okay, great. That's good to know." And if you'd like to stay up to date on the kind of things we're doing, let me put you on my email list. And if you're ready for a conversation, let's do that. So part of it is networking, going to events where you're likely to meet people that may have money to place. Networking is a great way of doing it. because you can plug into their network once they know, like, and trust you. They're not going to plug you into the network until you become a trusted commodity. Anybody who meets somebody the first time and says, hey, maybe you can introduce me to somebody, it is not going to happen. You have not earned the right for an introduction, because that person's reputation is at stake with their friends, and they're not going to introduce some slime ball they just met to their friends. Not going to happen. So just slow things down there, buckaroo. When it comes to networking, you got to earn the right to plug into their network. So figure out the process and make that happen. So networking is the first thing. Second is we work the network. So once people get to know us and like us and trust us, then we ask them to invite others to have meetings with us. So we work their downline. Birds of a feather flock together. So let's plug into their flock once we can illustrate that we got the bird feed for them. Third thing is with paid traffic. And so that's where we reach out and advertise in places where investors hang out. And probably the best place to do that today is YouTube.
Yeah, I just watched a webinar on YouTube marketing. It's fascinating. People that go to YouTube are already in learning mode. They go to YouTube to learn.
That's right.
Elaborate on that.
That's exactly right. Well, when it comes to social media marketing, there is marketing with intention and marketing without intention. When people go to YouTube, they have an intention. They want to learn something specific. And so when we can run a short ad prior to what they're looking at that's aligned with what they're looking at, then magic can happen, because they're already in the mindset of hunting for a particular solution, and we can grab their attention in that moment when they have the highest level of desire and invite them to learn more from us. Versus Twitter marketing or Facebook marketing, which is non-intentional. People don't go to Facebook to learn. They go to Facebook to be entertained. All right. And so they're scrolling, and they're not going to stop for something that in this moment is not part of their intent. And so Facebook advertising is all about curiosity generation, versus YouTube advertising is all about alignment with their current intention. And LinkedIn is somewhere in the middle. People go to LinkedIn to look for business opportunities, but it still is less intentional than intentional. So when we create content for YouTube that is in alignment with their intention, and we put it at the right channels at the right place, we can get a very high response for a very inexpensive price point, relatively speaking. Yeah.
Pretty powerful stuff, man. I love it.
Yeah. Yeah. We're gonna have a lot of fun with that.
Yeah, man. We're going fast here, but let's go into nurturing your investor database or nurturing investors, and then we'll go into the lightning round.
All right. So nurturing is along the lines of understanding what they're going to find interesting right now and supplying that to them. Now, the idea is you use email to let them know what you have, but you take them to your website to deliver what you have. And the reason why is because people don't read emails anymore. They scan emails and they move on to the next one. And so our emails have to become a lot more like our text messages, short, to the point, with an ask. And that ask is to take them off of email, off of social media, onto our site, where their brain will change temporarily and be willing to assimilate what they're looking for. And then our job is to make sure that we can put into their hands the information they're looking for in the format that they want to use to consume it. And I've done a lot of research into how people like to consume information, specifically in that 45 to 65 range that we've discussed. I'm not going to give that one away. Sorry. I paid for that one.
Man.
I'm keeping that right now. But let me tell you something. It's not what people expect. So that'll just watch this space. If you want to see what's working, then join us, follow us, get on our list, and consume what we're going to create.
Awesome, man. Let's jump into the lightning rounds. Let's start with, what is your favorite movie?
My favorite movie is Dr. Strangelove, or How I Learned to Love the Bomb. Peter Sellers playing 3 different roles, and Slim Pickens riding out of that 7 B-52 bomber on a nuke, waving his hat going, woohoo, woohoo!
I haven't seen that one. What's your favorite book?
My favorite book is probably Contact by Carl Sagan. That book continues to blow my mind every time I read it.
Wow, I'll have to check that one out. Tell me, where is your secret getaway? When it's time to chill out, where do you go?
I close my eyes.
I haven't heard that one yet.
Anytime, any place, anywhere, I can go to my secret hideaway by simply closing my eyes.
Man, it sounds like that dude in the Shawshank Redemption listening to the opera right now. All right, so what is your favorite day of the year?
Favorite day of the year is Christmas, just because everybody is happy. It's a happy, happy time. Everybody is happy.
I love Christmas too. Not everybody is happy though. Some people are pretty depressed because they don't have cash to buy gifts and stuff like that.
Well, they need to work on their cash flow.
Yeah,
and Christmas is not about gifts.
Favorite pastime or a hobby?
I'm a guitarist. I'm a keyboard player. I'm a musician. I love to play music. So if I have a spare 5 or 6 minutes, you'll see me with a guitar in hand, dinking around. Yep.
All right, so that leads me to, I got to find out, what is your favorite guitar? Tell me about it.
My favorite guitar usually is, I'm usually playing a Fender Stratocaster.
Okay, cool. What was your best vacation ever?
Oh boy, that's a wonderful question. I think my very best vacation ever was when I took my entire family to Walt Disney World for Thanksgiving. That was fantastic. We had so much fun. It was a joyful time.
Okay, I got to know this one. How long do you want to live?
As long as I am productive and I am happy and I am feeling good. When my body is no longer a fun place to be, I'm going to exit. But until then, I'm going to wring every bit of life out of it. I'm going to feed it well. I'm going to exercise it well. I'm going to think it well. I don't think age is anything more than a number. Life is how we choose it.
Very cool. And then your favorite travel destination, either a place that you've been to or somewhere that's on your radar that you want to go to.
I love Belize. I love diving in Belize. I've been there many times. I look forward to being there again this year. I love scuba diving. It is a completely transformational experience given the fact that you are the alien and you can die.
Yeah, man, I love diving or even just snorkeling and checking out all the weird, crazy life that there is down there. Yeah. I love that barrier. I think it's called, what is the name of the reef down there? I forget what it's called.
Yeah, there's the Barrier Reef. Yeah, it's the Barrier Reef.
Okay, I was thinking that was in Australia. But yeah, thanks for
there's
the
Great Barrier Reef is in Australia, but Belize has the longest barrier reef.
Yeah, it goes all the way up to Playa del Carmen, where I used to live, man. It's
Indeed.
Amazing. I used to go snorkeling every day.
That's it.
All right, very cool. All right, so there's a couple things that I wanted to go over real quick before we finish up here. I know you got a hard stop in about 8 minutes, but tell me about your podcast. It's called Selling Disruption. I know it's on pause right now, or at least you're taking
the Selling Disruption show is designed for where I interviewed a lot of people. It was almost 100 shows, and I put it on pause for a while because I just got tired of doing a weekly show. I don't, props to you, my friend, for cranking it out the way you do.
It's a ton of work.
It's a ton of work. It really is an enormous amount of work, and I just needed to take a break. But I interview people about how do we disrupt sales and how do we keep from being disrupted, because disruption is just a natural part of life. So we talk about aspects of marketing and sales and product creation when it comes to staying ahead of the disruption curve.
Do you have a favorite episode you recommend people going and checking out?
Yeah, my favorite episode is Tony Bodo, B-O-D-O-H, when we talk about how do you engineer 5-star reviews. And he absolutely blows my mind when it comes to understanding the customer interaction that generates trust as fast as humanly possible. And so Tony is a brilliant man. Every time I talk with him, my head explodes. He says the same thing about me. I think he's just being kind.
Yeah.
That episode is really good.
Speed of trust is a big one. I really appreciate that. I got some information from Stephen Covey, author of the 7 Habits of Highly Effective People. He's got one called Speed of Trust. That's a really good one. Also, wanted to go into your coaching So that, and also your program On Demand You, if we can squeeze it all in. Tell
We
me
can all
about the
we squeeze
coaching
it in.
that you do for people, and specifically for Bruce Willett.
Indeed. Well, Bruce is, I've been working with Bruce as an executive strategy coach for 2 years now, and his growth has been extraordinary.
Yeah.
As a business strategist coach, I work with business owners. I also work with executive suite members, and we work on specific initiatives. But common initiatives that I work with is putting together marketing strategies, developing culture. We work on leadership skills. We work on dealing with difficult situations and difficult people. And it's always based on leadership principles, sound leadership principles. And the idea is to solve the problems, understand the principles used to solve the problems so they never come back. And the philosophy is you put out a fire once and only once. So I work with my coaching clients to help them put out the fires so they have the cognitive capacity to work on meaningful projects, which will advance the company, make more money, increase the profits, and just in general, make the business leader have a much better life. And so I do this for quite a few executives around the nation. And I'm always looking for adding one or two more to my coaching clients. So if you want a conversation about what that'd be like, I'd be delighted to have a conversation with
Yeah,
you about
go ahead and give your contact information out before we go into On
it.
Demand You.
It's really pretty simple. Marks on LinkedIn.com, MARKS on LinkedIn.com is a great place to start. You can always email me at mark.smith, mark.smith at bijaco, bijaco.com. Bijaco. Yeah, love to talk with you. I'll give anybody 20 minutes.
Awesome. And then let's go into On Demand You. What is it that you're doing? Are you still doing it in terms of a conference? What about that aspect, that business that you run? Tell me about it.
Sure. There's two pieces. First, On Demand You is my new on-demand training platform where I'm putting the thousands of hours of content that I've generated over the past 30 years into an on-demand type of platform where you can watch videos, you can listen to the audio as an audio book, there's workbooks, you also have access to me as part of the fees. On Demand You right now has a fundraising course. How do you market to fundraisers? And that's the course that you've experienced. I have other classes that will be added very soon in various aspects of business leadership and business growth and business acumen. I've got just massive amounts of content that I'll be putting into that. I also offer the Executive Strategy Summit. And this is a 3-day event. In fact, Bruce has been through it 4 times, and I'm sure he'll be through it a few more times. Our 8th one is coming up in Denver in May 1, 2, and 3. This is designed for business leaders that want to accelerate business growth. We work on mindset, skill set, and tool set to help them with that growth by identifying what's holding them back and eliminating that friction, giving the tools they need to accelerate. And very powerful. I love doing that event. It is just amazing the results that we've got. So executivestrategysummit.com if you want to see some testimonials, you want to see the content, and it is by application. So if you're interested, reach out to me and we can have a conversation.
Right on, Mark S.A. Smith. Thanks for coming on to the show. It's been phenomenal. I can't believe how fast it went, just the magnitude of information enlightening as it was. Well, enjoy the rest of your day, man. Thanks. I'm looking forward to having you in town and working on the Capital Raiser machine. And
That's
I'll
it.
talk to you
Always a
soon.
delight, Ruben. Thank you, my friend.